All right, Peter, you ready on your end?
I am, Ted.
Excellent. Okay, good morning, everyone. My name is Ted Harris. I am with the Pennsylvania Petroleum Association. Welcome to our monthly webinar series. We normally do this the first Tuesday of each month, but with the holiday last week, we pushed it here to the 9th, so thank you for joining us. We're going to get started here pretty shortly. Before I introduce Peter, you're going to be muted the entire time. You can ask questions by using the question feature and go to webinar. And you're going to have to type them in, and then what we'll do at the end is I will ask them back to Peter. For some reason we run out of time or we can't answer your question, I will connect you with Peter after the fact. So at this point, I would like to introduce Peter Krajcik with the National Energy Improvement Fund, and the topic today will be driving sales with effective customer financing.
Thanks, Ted. And you almost got my name right. It's Peter Krajcik, and some of you may know me from my past involvement in the industry and energy efficiency financing, which we'll talk about in a while. But thanks, Ted, and thank you to the PPA for allowing us to talk a little bit about helping contractors grow their sales and what we're up to in Pennsylvania with the National Energy Improvement Fund, and also prospectively with the rebirth of Keystone Help that some of you might be familiar with. So what we're going to talk about, and let me just advance these slides here. Of course, this is how it always works when I'm trying to advance the slides. They don't advance. I did before, so sorry. So we're going to talk about 4 things, and I'm going to try to keep this down to half an hour because I know everybody's busy and you want to sell a lot of air conditioning and get out there and really get a good summer going. But we're going to talk about the 4 different kinds of buyers and the distinct approach you need to increase your sales with each one of them, and they kind of overlap. Talk about different kinds of financings that are out there and what we think are the pros and the cons. How we've been doing this a long time. We in my previous life kind of invented the energy efficiency finance space, and we have a lot of experience with really successful contractors and how do they integrate it into their sales process as an inherent part of their world, kind of like auto finance. What's going on in Pennsylvania now and what's going to happen with Keystone Help, and then what we're going to do especially for PPA members. Just a quick overview on the National Energy Improvement Fund. You might remember me, Peter Krajcik, as the CEO of AFC First. We formed the National Energy Improvement Fund in 2017, kind of going back to my legacy in this thing. My family's business based in Allentown, which we moved into energy efficiency financing about 1999. I sold that company to a company called Renew Financial, and then after a couple of years of doing that, we got back our old team together and have formed the National Energy Improvement Fund to kind of do things better and faster and smarter to help contractors really grow their business. Right now, we're operating in 12 states for residential programs, including Pennsylvania. We also operate nationally for commercial energy efficiency finance. So if you have a commercial project, we can accommodate that as well now. We've been named a Home Improvement Expert Partner of the U.S. Department of Energy. And again, we work with contractors, manufacturers. I'm actually doing this webinar from the headquarters of Energy Kinetics, and many of you know Roger Marin. I had a meeting with him today, so he's allowing me to use his conference room, but we work closely with them and distributors and governments and utilities to really help contractors grow their business. There's my smiling face, so you might recognize my partner, Matthew Brown, who's based in Denver, and all the programs that we've done over the years, including Keystone Help, and currently we're running the state program in Maine and a number of other states, as well as programs for utilities and manufacturers in those 12-state markets. NEIF focuses on 3 different facets: the residential energy improvement financing we're going to talk about today, commercial energy improvement financing, and then we've also started a unit called Rebate Bridge, which in New Jersey we are providing advanced funding on utility and other rebates to contractors who don't want to wait 90 days or 120 days for rebate funding. So that's about NEIF. Everybody that we talk about our programs to, they become an approved National Energy Improvement Fund contractor. And the biggest differentiation that we've seen, and why I've always really enjoyed working with HVAC contractors and oil contractors in particular, is because of the stability of the business and the commitment to quality work, customer service, financial stability, and really, to me, it's all about company and personal integrity. So it's not so much about the size of your business; it's really about the condition of it and the commitment to integrity and customer service. So let's get into the meat of this whole thing. Our primary goal is to help you increase your closing rates. And what's the biggest problem that consumers have? Can we afford it? And you may not think that, but that is in fact the number one issue for consumers considering home energy and other major upgrades. The problem is pretty apparent. Everything you sell, whether it's a boiler or a furnace, air conditioning, is expensive. They need $2,500 up to $25,000 or more to pay for just kind of core energy improvements. And like most people, homeowners have tight budgets in many cases. They delay the upgrade, and you've seen this all in your sales process, where you think you have the ability to really help a customer with maybe a higher efficiency piece of equipment, but they may install the cheapest or least efficient model just to get by or not do it at all. And, all customers are not the same. No one size fits all. There's no such thing as a one size payment solution. Some people want to pay cash. Some people want to use credit cards. Some people are enticed by that short-term 0% stuff. Other folks are looking for long-term affordability. And as you know, standard dealer finance programs can meet many consumer needs, but can be very expensive for a contractor and maybe sometimes even a bit deceptive for both the contractor and the consumer. So the reaction typically, and I like this picture because I think he looks relatively shocked, people stay on the fence. The market's huge. 10% of all homeowners will make energy improvements to their home annually. So you can just, you know that because that's your business. They only purchase one or two HVAC systems in their whole lifetime, so it's a big decision, and it's probably the third or fourth largest purchase a homeowner will make after home, vehicle, college. So you're dealing with a big emotional decision for most people. I try to bucket contractor consumers into four buckets, and I think this is my attempt at a Venn diagram, so just go back to 7th grade and remember what that looked like. But you have a reactive buyer, which we'll talk about, which is somebody that is saying, oh my gosh, my heat pump, my furnace just broke, I got to fix it. You got a proactive buyer that may be a little bit more forward thinking and looking at high efficiency or other kinds of things. Those intersect with the other two kinds of payment. People either pay cash, and paying cash is not just writing a check. I'll go into that further. And then you have a buyer that's motivated by monthly payment. And all those bubbles intersect over top of each other, and you have to be able to address all four of those kinds of customers independently. A reactive customer, and I call it the twilight zone, the typical improvement that you do follows into many consumers' twilight zone. It's too big for a credit card. They don't have $7,000 limit on their credit card. It's too small for a home equity loan because they don't want to go through the whole hassle. And it's a surprise. It's an unbudgeted major capital expense. It's time sensitive. They need the work done ASAP. And they end up putting in a cheaper system due to lack of funds or availability. The proactive customer maybe has thought about this more, and this might even be thinking about people looking at renewables or even super high efficiency things or switching fuels or putting in geothermal. It's a bigger project cost. They think more about the project, but they still need payment options to pay for what they're going to do, or otherwise they'll piecemeal it. Here's just some food for thought for you. When you think about, and I've been trying to make this analogy for a long time, that guys in your business are really approaching the size of improvements of a small car. And you look at statistically, 85% of all auto purchases are financed on monthly payment plans. When's the last time you went into a dealer and were not offered a monthly payment option? And that's the cost of a home improvement for most people. It's becoming a major capital purchase. The average American's current available cash is $3,000 to $7,000. So what's your average installation cost? $7,500, $8,000? Are you going to take a customer's complete cash reserve? So think about that. Think about the positioning of where your product is now in today's market. So cash customers, we all love cash. Cash is king. They're great. It's immediate payment and there's no receivables to collect, but they're really just a fraction of the market. And this is my favorite contractor line when I talk about financing. They say, we don't use financing because all my customers pay cash. And my response is, no, only the customers that are actually buying from you are paying cash. What about everybody else? So I just find it, not ironic, but interesting that the perception of when you're selling an $8,000 system that everybody has the ability to write an $8,000 check or wants to because, gosh, maybe they have their kids in college. Maybe they're doing something else. What can we do to make it more flexible and available for them? So here's the big issue on the closing rates and cash buyers versus monthly payment buyers. if a contractor's closing rate is 40%, and I think that's probably a pretty good estimate for most folks. I realize that oil contractors that are also selling oil tend to have a higher closing rate to their existing clientele. But clearly in the HVAC industry, from what we see, it's a 35 to 40% closing rate. What's happening to the other 60%? Why aren't they buying? Is it your reputation? Well, I hope not. I mean, you guys are established long-term businesses that have been around for quite a while. Is it the price? It could be. It could be that they're scared. And in today's economy, are they scared of gimmick financing, which is oftentimes the only kind of financing that's offered to them? But really, is it simply they're not being given an affordable monthly payment option that comfortably fits their budget and can be potentially offset by energy savings? So I think that's the consideration that we have to make here, and how do we address that to help you drive your sales and increase your closing rate? Oops, I'm sorry, I just screwed up here. Give you a preview of the rest of the presentation. You would think with the limited buttons on a computer, I wouldn't be able to screw this. So I want to challenge your perception though regarding financing, because many contractors think, yeah, I'm offering financing. Even though they're forms of credit cards and promotional deals are not really financing. They're just payment options for cash customers. So when you are offering 12 months same as cash, or a furniture store is, or 24 months same as cash, or you're taking credit cards, you got to do it. It's a great product. But customers who pay by credit card, who take advantage of those short-term 0% or same as cash deals, are most likely cash customers who would have bought from you anyway, because the only reason they're doing it is that they know they already have or can get the cash to pay off those options. Who in their right mind is going to take a 12-month same as cash deal or 24-month same as cash deal when you know that it's going to convert to an 18 or 24% interest rate? So these are cash customers, and don't think of that as financing. Certainly a viable, important part of your arsenal of financing tools, but that's not the market we're talking about. They're necessary sales tools to help certain cash buyers get off the fence, but do they really expand your market? Do they actually increase your closing rate from 40 to 45% or to 50%? I don't think so. I think promotional financing is a great sales tool, and for someone who already has the cash, or for a smaller ticket item. If I'm going to Best Buy and buying the $1,000 big screen TV, yeah, maybe I'll use the same as cash financing because I know I can pay it off whenever I want to. But you're selling things that are more expensive. And think about how your cell phone is sold to you, how they converted the whole plan now to everything is financed because a cell phone is a big ticket item. If you or a customer didn't have $8,000 today, how are you going to get it in 12 months to avoid paying high interest rates? It's really a scary proposition for many and most consumers. So offering a fixed monthly payment option, in addition to these promotional things, again, I think customers need all the ways they can pay. They need to know they can pay cash. They need to know they can pay credit card. They need to take advantage of special manufacturer programs you might have. But they also want to see a monthly payment option that allows you to maybe bundle services and present a good, better, best payment option and show the offset with maybe potential energy savings. So I just put this together just to show you what I think are the options for financing $8,000. I'm using that as a typical number. So people say, well, I can go get a home equity line of credit. Well, absolutely. If you have a home equity line of credit, that's certainly the best way to finance home improvements. It's still tax deductible to some degree, a little bit less because of the tax reform codes that have been given to us. But these are second mortgages, and they're great. But if you don't have one and you have to replace your furnace, it's going to take you 2 weeks to get a home equity loan. So that's a fine thing if you have one, but maybe you, again, want to use it for college education or other improvements. Well, first mortgages, people are not going to refinance their houses to replace their furnace. So that's, I don't think, even a viable option. Credit cards, great. They hand you a credit card, you take their payment, you just swipe it, but most people don't have that availability of credit beyond $2,000 or $3,000 or $4,000 or $5,000, and the monthly payment can be high. And of course, there's the transaction fee to the contractor, which is nominal, less than 2%, but something you build into your pricing. Promotional finance, and I'm talking more about the shorter term stuff here, that are subsidized by manufacturers sometimes, or offered by what I would call finance companies. So the companies that you know to be generally fintech-backed private equity or big Wall Street-y kind of finance companies. What's scary about these, they're variable rate and payment, which can escalate to higher rates after the promotional period. They have instant approval, that's great. Limited paperwork, that's great. But there's possible bait and switch reputational risk for the contractor. And there's high fees for the contractor unless they're subsidized by the manufacturer. Now, we've also seen recently an increase in longer-term 0% financing programs. So I've seen 5 and 7 year 0% financing programs offered by some contractors through manufacturer subsidies. And that, for a customer, is probably something they should think about, because why wouldn't you take 0% for 5 years or 7 years? But as we all know, nothing in life is free. So those 0% for 5-year programs, the capital source that's putting up the money needs to get a market-based yield. In today's market, it's 8, 9, 10%. So how do they make the 0% 10%? On an unsecured loan, they charge the dealer a relatively large discount that could be anywhere up to 20% on a 5-year 0% deal. Maybe the manufacturer will subsidize part of that for a period of time, but still, even if you have to eat 10%, where's it going? Is it going, is it coming out of your pocket? It can't go into the customer's price because that's a violation of fair lending. So what's happening to it? What I call straight financing is what probably most of you offer who are currently offering financing, and that's the stuff that you see through Home Center, Home Depot programs and finance companies. But I find this interesting. When I look at some of the competitive pricing through some of the larger lenders, they say they're fixed rates, but in reality, they're not. They say, yeah, I have a 9.9 program for 10 years. Well, if you look at the documents, that 9.9 is really a credit card-based price and can change if the customer is late by 31 days, like late by a day or other factors. So it's not a true installment loan like you're used to with auto finance. So I think the best analogy I could ever make to anything like this is related to how you pay for a car. They also, we'll talk about what risk-based pricing is in a bit and why I think that's kind of a scary thing for consumers. And then you have what we do, which we call energy efficiency installment financing, and that's primarily folks that specialize in doing the work financing the work that you do, and could be working with contractors in the heating, cooling, remodeling, insulation business. The rate is fixed for the life of the loan. It's typically a longer term, means a lower monthly payment. It's typically one size fits all, which means all consumers who qualify get the same rate. And it could be integrated with a state or utility program for more contractor credibility. What's the con to it? Some contractors, and probably not the guys in this phone, but higher pressure contractors tend to really want to control the lending process, and they want to be the one disclosing everything to the consumer. Most of the contractors that we work with want to have the ability to offer financing but not be overly engaged in the process. They say, listen, we install wonderful heating and cooling systems, but we are going to let the lender take care of the paperwork and deal directly with the consumer, but don't screw up my sales process, Mr. Lender. So I think those are the buckets of competitive products. I just, don't view this as controversial, but I do believe that some financing programs pose reputational risk to the contractors and also raise some fair lending concerns. We talked about adjustable rates disguised as fixed rates, similar to credit cards, and that can get a customer thinking this is a bait and switch product. And risk-based pricing, and this is really something that's evolved over the last, 3 to 5 years, where a good customer with good credit will get a very low interest rate, and a customer with marginal or slightly less good credit will get much higher interest rate. And so you don't know when you're going into the home what interest rate the consumer is going to get and what the monthly payment is going to be. It can result in potential customer dissatisfaction and difficulty in quoting monthly payments, and even some potential fair lending issues where you have consumers saying, well, I got charged more than the guy next door to me, even though it's based on their credit. It just raises a can of worms. And that's why I say this in red. Shouldn't energy improvement financing be like auto finance with a locked-in rate and payment for the full term, with the customer able to pay off early or pay extra principal without penalty? How do you make this the simplest kind of financing available for a consumer so that the contractor understands it, the consumer understands it, and the consumer has the most flexibility? Give me the lowest possible payment, but I know I can pay it off whenever I want to, and I know that if I choose not to pay it off, my rate is locked in, and it's going to be simple to understand. Let's look at the cost of financing. Do the cost of certain kind of financing options outweigh the benefits? I think you have to look at the real cost and its impact on your bottom line. Someone's paying the contractor buy-down cost. Are you eating it as a cost of doing business? Is the customer paying a higher price? Really, is it helping you increase your close rate? And some of these programs, is it truly addressing the monthly payment buyer with the lowest possible payment? So I just laid out here what I see as three typical projects that we see out there right now. So I see very good companies offering a 0% 16-month program where the monthly payment will be $125 on a $7,500 project. If the manufacturer is not subsidizing certain kind of equipment, the cost to buy that rate down will be close to 18% for the contractor. If the manufacturer is buying it down for a short period, it might be less than 10%, like 8%. But in any event, it's still going to cost the contractor $600 to $1,300 on a $7,500 job. I don't know where that's going and how it's being paid. Another offer that we see is maybe a $799 product where the payment is nominally lower, and I apparently have a typo there. So because obviously the 0% payment would be lower, so that's a typo. Excuse me on that. But the contractor is still paying 5 to 7% on a buy down, and again it's $375 to $525 of cost. Our programs right now, before we get into what a Keystone Help program might look like, are a 10-year fixed rate program at a 9.9 interest rate to all borrowers. The monthly payment's $99, and there's no cost to the contractor, so no price to build in. And the monthly payment is the lowest of all those options. So just, again, be cognizant of it. I think you have to be able to offer all those things available to your customer, but just look at where things fit in. If I have to give one message of counsel to contractors, don't make judgments or assumptions. You can't assume that because somebody lives in a big house or has nice cars in the driveway that they aren't interested in financing. They also may have 3 kids in college and paying tuition. And you can't determine that they might be interested in monthly payment. I think you have to offer all your financing options on all your proposals. That's the greatest sales obstacle the customer has, is that, and you could remove it by saying money is not an issue. Hey, Mr. Jones, we take cash if you want to pay that. We love cash. We take credit cards if you want to get your points. We're happy to do that. We have a special program through our manufacturer that's 0% for 24 months. That might be great for you if you're available to come up with that cash in 24 months. When we have a Keystone Help program, we'll tell you about the special state financing program that we have. And oh, by the way, we also are a partner of the National Energy Improvement Fund, and we offer this true fixed long-term payment plan, and the payment's only $99 a month. Always put the monthly payment option next to the cash price, and you'll be amazed how that simple act converts more sales. I think, and some of you guys on the call might remember this, back in the late 90s, we were going around as AFC giving contractors stickers to put on their proposals, because I couldn't get it through the sales guy's head that you can't wait for a customer to ask about financing. You have to say, Mr. Jones, it's going to be $7,500 or $99 a month with our special financing program. Today, and we'll get into this, that can be done all electronically with a tool on a phone or an iPad. But still, even if your proposal allows it, that's something that you have to do. If you don't put it next to the full cash price, it will never, ever convert or help you increase that incremental increase in your close rate from 40 to 45%. Are you leaving money on the table? Just a nominal increase in your closing rate, simply achieved by offering all potential customers more options on how to pay you, can result in a monumental increase in your sales. And I mean, think about this, that if you're making just one more or two more, if you're doing 10 proposals, I'm making the numbers really small here, but 10 sales proposals a month, and you're selling 4 of them at $8,000, that's $32,000 of equipment sales. I realize that that's much smaller than most of you do, but just one additional sale of that, you multiply that up by 12, you've added hundreds of thousands of dollars to your revenue stream just by offering another way for a customer to pay you, and also by increasing your close rate from 40 to 45%. So let's talk about specifically what's available in Pennsylvania right now. So we have our new product, and some of you will see this brand for the first time. Some of you might have seen this whole NEIF home energy loan. We're calling it the Energy Plus loan, and it's for all homeowners who are making qualified improvements to their primary residence or vacation homes. Right now, anything that you guys sell can be qualifying. So in heating and cooling, it's furnaces, boilers, heat pumps, air conditioning, tank removal, all related work, you name it. And we can integrate other products as well, including windows and air sealing and generators and water heaters and water treatment, geothermal, all qualify under this program guidelines. So no minimum efficiency requirement or anything for this particular program that we're offering as our market-based program in Pennsylvania. They can finance 100% of their improvements up to $25,000, all the things we just talked about, no adjustable rate, no lien on the home, no home equity required, no fees, no penalty for prepayment. How easy is it? The customer gets an estimate from a NEIF-approved contractor. They apply online directly or through the contractor's portal, and we give an instant credit decision, which is probably a big improvement over what you might remember from 10 years ago. If you're engaged with us, things have gotten much more rapid. You do the job. You upload your proposal to our portal, and you do the job, and then we pay you when the job is completed. So it's a very straightforward process. And again, our staff at National Energy Improvement Fund are many of the same people that you may have remembered at AFC First. So we understand how to work with contractors, especially Pennsylvania contractors, since we're based here. Just to give you an idea, here's an example of what the program looks like. Again, $99 a month for $7,500. The customer can pay, if they want to pay it off sooner, they pay $150 a month, and they not pay it off sooner. So Keystone Help. Most of you remember we started Keystone Help in 2005 as AFC First for lower rates for higher efficiency improvements. And that was funded by the Pennsylvania Treasury Department, and we made it into the most successful state financing program in the country. We did hundreds of millions of dollars of loans under that program and engaged contractors all around the state, and it became the kind of the single measure about how a financing program should be run. It's been on a hiatus for the last couple of years. So we have been in discussion, the National Energy Improvement Fund, with Pennsylvania Treasury again to relaunch Keystone Help. And it's probably going to be a simpler version of what we did before. It's likely to be just the single measure improvement, so it's not going to require energy audits or anything like that. And probably instead of a 9.9 program, it will be a 7.99 or a 6.99 program with no fee to the contractor for standards that look something like what you see there. So we are talking about not having a modified standard that may be a little bit more liberal than Energy Star, but still promotes high efficiency improvements. So again, this is all in development. I don't want you to take this as gospel yet, but we'd appreciate any feedback on any of that as we develop it, and we'll keep you up to speed. Again, we have what you see with the programs we have now. We provide our contractors and their salespeople with the ability to do everything on their phone or on their laptop or in the office. We give you links to put on your website so that you can drive customers directly to an application, all pre-populated by you. Very pretty pictures of what things look like, but very simple. And then when you become a National Energy Improvement Fund contractor, you offer our commercial programs, our rebate bridge programs. We'll hook you up with special programs that we're aware of. I'll talk about the contractor search engine in a second because we are still testing that, but that is where a consumer comes to the National Energy Improvement Fund site, and they're looking for a contractor in Harrisburg that does heating and cooling. Well, our approved contractors will pop up to the top, and if you're a preferred contractor, and I'll talk about this further, but a PPA member will be a preferred contractor, you will pop up to the top of that search engine. And again, you'll see it in about 2 weeks, but you will pop up there. A customer can apply directly, and that could be a lead generator for you. We're also working with this company called Pearl Certification to be able to provide your customers with an additional kind of anointment and certification of the improvement that you've done without really any extra work on your part. Our sales team, and who I have on the phone with me, is two guys that you may know very well. Randy Bach, who is our business development director in that covers Pennsylvania and New Jersey, has been with me and my team for several years and does a fantastic job working with contractors all around the state. And then Greg Burns, who is sort of a legendary figure in some parts of the oil and HVAC world, lives in Portland, Maine, but works with us in Allentown on similar things, extending our reach out to contractors. So two guys who really know your business that are here to help you, plus a whole contractor support team ready to help you too. And we're also coming up with some other ideas for cooperative marketing programs that can focus on new central AC for $90 or whatever it's going to be. So to become an approved contractor, standards are the same standards that you've had in the past. And believe me, if you've been an approved contractor with us in the past through AFC, I can tell you tacitly that you're already approved, but I can't bless you formally because we are a different company. So I do need you to submit, register on the site and get you approved under the new company. But if you've been in business for 3 years and have good, better business, and especially if you've been a formerly good contractor of ours, you will become a NEIF approved contractor. I talked about this briefly. How do I offer the program? You can use the portal right in the home to take applications. You can add a custom link to your website that we'll provide you. We'll provide you collateral to leave behind with the customer. Our work with PPA is, again, this will be evolutionary, but the PPA will be featured on the NEIF website. There will be a special sponsor logo on the NEIF website. PPA members will be badged on our search engine, so when you pop up at the top, and if you're a PPA member, the PPA member logo will show. Elevated status for all PPA members. We'll do these marketing programs, and we are really trying to integrate with quality organizations like the PPA and Ted and John and everybody else there to really make this work for them. There's us. You'll see some names you know. You see Grandy and Greg and me and Tessa and Heather and Jeremy and many other people you may know, and that's what I got. So, Ted, do we have any questions or anything I can address? Certainly, we're available and happy to answer any questions right now.
We had a couple people get on late, and just to reiterate, you can ask questions using the question feature. You would have to type it in, and then I will pass it along to Peter. So we'll give it about 15 seconds for that if anyone does have a question. If not, there is contact information here on the screen. You can certainly contact Peter and his team directly. If you did jump on a little late here, there will be a replay of the webinar, which is available. That will be available within 24 hours. And I'm not seeing any questions at the moment. So, Peter, thank you very much. Appreciate it. And look forward to working with you and watching hopefully this program regrow.
Okay. Thank you very much, Ted, and thank you to the PPA, and thank you for everybody for attending. I hope you have a great day. Thanks.
Okay. Take care.